connect with Nischal Maheshwari, Head of Institutional Equities with Edelweiss. Nischal, good morning. Thank you for joining us. Nischal, based on the GST final rate, have you managed to identify some gainers and losers where you think that post the GST implementation, there's going to be change both in demand and supply equation?
So, Nikunj, quite a few of these rates are still very indicative. Some of these have been clearly as yet indicative rates. So, you are not very sure whether these rates are going to be final. But on the initial thoughts, I think I would say versus the market expectation, I would put it actually. So, I think the biggest losers I see is the building material sector actually. Where the rates have been maintained at around 28% on an average for tiles, plywood, cement. All these sectors basically have got the same rate, where the market was expecting 18% given that the government's focus on the housing sector as a whole. So there I see that there is some negative impact which can come as per the market expectations. The benefit I see clearly on the FMCG side, where on the toothpaste, detergents, soaps, not detergents, soaps, and personal care products. I think there the rates have been brought down from around 24% to around 18%. But more or less everything seems to be in the same way. There are some few more outliers, like branded apparel has been taken up from around 5-6% or 12%, whichever the category you were, to 18%. Which is sort of a negative, and like the difference is unbranded is 0 and branded is 18, so there leaves a lot of scope for what you want to do there. So I think still the rates are yet to be finalized, but what I see here is clearly that the implementation is going to be the key. If you are going to be tracking it very closely, then I definitely see that the reporting would be much better than what we have seen historically.
Nischal, good old SBI, or it is time to lean towards BOB?
I think I would stick with SBI actually, and given the quality of the management and given that the numbers very clearly they have indicated that the worst of the NPA cycle is behind them. So I would believe basically that SBI would be a better bet in the current scenario.
Do you think that would lift sentiment for across the street when it comes to state banks? Essentially, Nischal, would you look at separating the wheat from the chaff?
I think I don't know basically whether that's going to lead the whole sentiment for the PSU banks, because you have to now very clearly see that there is the guys who have the capital to grow and the guys who do not have the capital basically. So the PSU pool, the smaller banks which are still struggling and have got large amount of NPAs, I don't think so. That is so en masse PSUs are not going to be improving. Bank of Baroda, SBI, these are some of the banks basically who have the capital, and government continues to put in more capital, plus they are now looking to raise money on the markets also. So I think these are the banks one should be focused upon, and it's not going to be all the PSUs together.
Nischal, from the index to your mind, which is the cheapest index stock?
Cheapest index stocks? I think no doubt it's the IT pack basically.
But
the IT pack, if you yes, so they are cheap, but you have to actually look at it. If you look at it on a PEG basis, they may not be cheap, but on a PE basis, definitely I believe they are the cheapest.
And next follow-up question, Nischal, is that what is cheap and what is likely to make money? I mean, buying IT, you may be buying it cheap, but you may not make money. So my obvious question is that what is attractive to make money?
Yeah, that's an interesting one actually. Yes, they are cheap and you still may not make money on them actually. But I think on the index, I continue to believe that some of the banking stocks like ICICI, SBI, these are some of these stocks which are cheap also by historical standards and are in a recovery phase. So, and they are very well placed now. If you are saying that the economy is going to be turning around strongly, and so these are guys who are focused onto the corporate banking side, and if the corporates start doing well, so these are the stocks which should be very well positioned. valuations are in your favor, whether it is SBI or whether it is ICICI Bank, both are I think less than 1.5 time price to book on the core earnings. So I think these are two stocks one should look at on the index.
Nischal, what is the secret behind some of these halo stocks? I mean, I can endlessly argue that why Bajaj Finance and Bajaj Finserv are expensive. Shree Cement, efficient company, but arguably one of the most expensive cement stocks in the world. Eicher Motor, I don't even want to go there when it comes to the P multiples. Yet these stocks, they continue to find both institutional buyers and retail buyers.
So I think the common thing among all the three companies is the efficient use of capital. I think that's what we all should be bothered about, basically saying that how well the management is using your capital, which whether it is in the form of equity or debt. I think all these three companies amazes you. You could be surprised. The latest plant which Shree Cement is putting up in Karnataka is just happening at around $60 a ton. On an average, the whole industry puts it up around $125 a ton.
Nischal, the world right now is excited about what Maruti is doing. But is it time to think contra and also recognize that Tata Motors is suddenly available very cheap?
Yes, it is cheap, no doubt, Nikunj, but it has got its own challenges basically. So obviously it is the domestic market where they are still struggling as far as the CVs are concerned. There, if you really look at it, Ashok Leyland has clearly taken the lead. It's continuously gaining market share for the last 2.5 years, and I don't think so Tatas have a very strong strategy actually to gain back the market share as far as the CVs are concerned. If you look at it, Tata's basically largely it's a global driven company. Profitability majorly comes now from its offshore operations, and that's where I think some amount of struggle is there, given that there has been some weaker views coming in from China. So I think that's where the whole story is. Yes, it is cheap, but there are a lot of challenges as far as Tata Motors is concerned at the moment.
So he just came out with a note, citing caution for pharma. Are you also in the camp that look the worst is behind?
No, we have been cautious for 2 years. So there is a note we had put out 1.5 years back, and it very clearly states that the US market, especially the generics, has been continuously, there has been a huge amount of pricing pressure which is there, and after that basically on top of it the US FDA problem continues to be there. So I do not see that there is a early reprieve as far as pharmaceuticals is concerned. And if you really look at it, the stocks still, all of them continue to be 20 times and above. Now in an industry basically, and I've argued this earlier on your channel also, an industry which has got this kind of uncertainty basically of US FDA, and mind you, there is not a single large plant basically or single large player who has still got, after he's got in 483, he's got a clearance from the US FDA. So in this kind of a scenario, the stocks still seem to be not factoring in the risk. So we continue to remain cautious on the whole sector.
We are up about 14-15% on the index this year. Do you think for rest of the year we are likely to have a flattish kind of a performance? Because 15% in first 5 months, I mean, it's a dream return for anyone in best of the market also.
I agree to you, Nikunj, on that. Sorry, I agree to you, Nikunj, on that. 15% is a good return. But I think there are a lot of levers right now in place, and what you have to also see is that for the last 2 or 3 years, market has been sort of, after the initial run-up, after Mr. Modi got elected, the market has been sort of flattish. So I think this is the first strong run which we are seeing, and I am very hopeful that the earnings plus the economic recovery is going to be stronger, plus the GST rollout, that's also going to get that's also going to start showing up in the maybe third or the fourth quarter. So I am hopeful that you will end up in a nifty being 5-digit number by the end of the year.
Nischal, let me get closing comments from you. What is the amber light or the red light in this market?
I think a couple of things. One is the outlook as far as the monsoons are concerned. And the second thing, I would very closely look at what's really happening on the economy side. And the third one, I would look at the GST rollout, because in the short term, it could impact negatively. the second quarter numbers could get impacted because there is going to be destocking and restocking again. So I would closely look out for these 2-3 things more closely, because I think global cues not much worrying to me basically, because I clearly see out there that there is growth which is happening. There would be some hiccups here and there, but I continue to believe that there is a good growth which is happening in the consumption basket of the world, which is the US and Europe. So that's my